Good evening. This is the Elliott wave update for the NASDAQ 100 for Thursday, December 16th, 2021. I gotta say, today's keyword is volatility. I was a little bit surprised at the response that the market kind of gave today and the direction that it took and the volatility that it created, et cetera, et cetera. It basically reversed everything after yesterday's announcement from the Fed that they will begin to taper multiple times next year. Initial reaction for the market was a quick downswing, replaced by a total turn and closing up $360. And today we end up down 405 after being down much more than that. It's very interesting, because under Elliott, you're going to see how I'm labeling this. And what it continues to say and what it continues to hold on to is that we'll have yet another turn, and that volatility will be replaced to the upside by what happened today. That's what this is the area that this particular count is in. So let me just kind of dive in and maybe settle some of this. I'm opening up the chart, basically just showing the volatility in the upside move that began up at 15,538 back on December 3rd. So from that level, we put in a massive, very strong rally, and that took place beginning not last 2 weeks ago, 2 Sundays ago. And it was very strong, and it was very volatile, and the volatility was straight to the upside. And it ends up being just the first minute wave. Now, it's kind of getting interesting, because is this an A, B, C up? Which it could be from here. But that does not cover the volatility other than past what we saw. But it does start to cover the volatility where we're dropping off again, feeling like we're dropping off the face of the earth. As sellers came in and they were done with tech, they were done with the volatility. They were done, not necessarily with volatility, but with the premium to the upside. And now they just came in and they go, no. And big swings in Apple, Advanced Micro, AMAT, Amazon, Facebook, Google, Intuit, Microsoft, Netflix, NVIDIA, Tesla, all of them. And these were the stocks that a lot of what they call the whales, but they were moving in at a particular out of the money call to the upside, and then pushing straight to that level, creating what is being called a gamma squeeze. Now, it's just a gamma squeeze, but it's in the opposite direction. So the more of these calls that you may have. But see, to me, it's like, that's not how it's being played out. Because again, I'm going to tell you that if you go and you look, there will be, say, for example, on Apple, 250,000 options trading. That represents a lot of stock. And the open interest may be 60,000. So that's what's being carried forward, the 60,000. But when you go tomorrow to factor in the 250, maybe it's now down, and maybe it's only like 50,000 or 52,000. You're like, wow, where did all this come from? What happened to all of that? And what I keep trying to say is that when these trades take place, the buyer and the seller, boom, the trade is done to these large high frequency traders, our trading firms, the algorithms. They sell it, they buy it, it's a done date, it gets exercised that night. So what seems to fit in an Elliott manner in terms of the count and what I expect, we got that yesterday, but today reversed it. So the only way that I can really continue to allow for an upside view, and again, I'm going to be giving you both sides right now. So you get the upside and you're also going to get the downside. So the alternate view I'll give you in just a moment. So for the upside to stay in place, the market still should not break down below 15,734. That continues to be the no break line. And what would occur at that time is this whole thing would get left as an A, B, C. And that's it. And that would suggest, I'm not sure what I'll call it. It could be a B wave if this and this turns then back into the A wave. But that's what would happen there. And then we'll go into that in a second when we get to the alternate view. So right now, the market needs to hold that. And then this would be called an wave 2 of 3. So it continues if it can get there. And that would be, because it resembles this, just on a little bit smaller scale. This is the minute degree. This, what we're seeing now, is the sub-minute degree. I'm expecting a very large third wave. If that's what all of this was telling us and all of this was telling us, then that's what's going to happen. And this then fits. It fits the picture. It fits what's going on in the market. And it would demonstrate that it's like, once again, we may blast off through the roof. But again, what needs to occur is exactly what happened yesterday, but this time it's on a larger scale, so it has to go even further. So the power and the volatility is going to have to kick up again to absorb all that happened today and then turn around and just reverse it tomorrow. For whatever reason, this is a purely technical view. So on a technical basis, if the market's going to go up from its current position in this current larger picture, it has to do it nonstop and get above that high nonstop. Okay, failure keeps that break point in place. If it breaks it, it's going to negate, in my opinion, it will negate the upside for right now. Now, then the ultimate no break zone is at 15,538. That would kill it. Break below that, then this is all done. And this all goes back. And it becomes something else. The alternate view. Now let's just take a look at that. So let me just finish. Just to recap, if the market continues to move higher under the current count, it's going to be doing so in a sub-minute wave 3. So this would be the 3. This ended up being the third within that sub-minute wave 1. So it's going to be this 1 degree stronger. Okay, so it's like measuring an earthquake. Okay, if you live in the West, it's like if the scale, we know how to read a Richter scale. What the difference between, I think, like a 5.0 and a 6.0 is that the 6.0 is 100 times stronger than the 5.0. So each 10th, is 10 times. So 5.1, it's 10 times stronger than 5.0. So you can measure that out. Well, now let's take it over here. This third wave was likely a 5.0. This third wave has to be a 7.5 or higher to get that, because you're shifting the momentum yet again, and you're throwing a lot of money in order to do it. Can happen. This is what I would look for. If that occurs, then I'm looking for this stronger upside. So breaking above these moving averages, et cetera, et cetera. Okay. Now, if the market continues to go down and it breaks below 15,734, we're likely reverting over to what I'm going to lay out as the alternate count. So under the alternate count, we would back it up. We'll go to the 4-hour chart real quick, because this is going to end up being, if it breaks that level, this pushes what I'm going to show you now pretty strongly into being preferred. Right now, we moved the 3, which was here, and the 4 was there, and that was all the 5 and all of the sequences along with it, completing there. That would remain the case. So the 4 would go back here, the 3 would go down to here, 5 would come in here. And this, because it's still an ABC down, would become wave A. And it would become wave A on a minor wave A. And then all of this would become a minor wave B. Okay. And then we're working on the C wave down. So first, let me remove this, and I'm just going to show you how we would measure this out for a C wave. Now, got that right. Okay, so we start up here at this high and bring it down, keep it low, and we take it up to that. Here's what we're looking for. Minimum. Wave C would be equal to wave A at 15,231. Minimum. Okay, if this is what's happening. What kind of probability do I give between the preferred and the alternate view? Once again, it is sitting at 50-50, and that's at best. Some I could throw over and say, well, it's about 45-55. 45 up, 55 down. We got to wait and see. And that could change again. So this is a fluid, ongoing thing. But right now, 50-50. So if it is truly going to break below, first of what I said, that one level, 15,734. This one over here. Excuse me, that one. Then again, it breaks below 15,538. Boom, the switch will happen. All this labeling basically will stay the same, except on the minute and the minor level. That would switch out. This again would become a minor A. This would be a minor B, and we're in a minor C wave down. And then we're going to go back over to the other chart, the hourly, and then we're going to start to have to count this. So let's go back and we'll open this up a little bit so we can see. What do we see? Nothing but a straight line down so far. So where's wave one? Where's wave two? It's still all a part of the beginning. Unless I'm going to take it down, see, and the lower I take it, the lesser degree. So if I'm going down off of a minor hourly chart, I'm going down to, let's say, a 15-minute chart, so I could see some of the internals on here. It wasn't just straight down. It pretty much was. But I could begin to see where we got little rallies. So 1, 2, 3, 4, 5. So here, possibly the very first wave, possibly the minute wave one, right there. A, B, C. So we're likely going to rally when we reopen in about 20 minutes. Not a bad call. So, but then if it only does 3 and then it turns again, then I'd be expecting it to start to drop below these lows we saw today. And against that level, that's even down further. So we have 15,734 and then 15,538. Those are two very important levels. If they hold, particularly 15,034, 15,734. If it holds and turns higher without breaking it, then the preferred stays in force. If it falls and breaks it, then we've got something else going on. And I'll tell you, first things up out of the boot here is that this can be counted as 5 down. So that's just, I think, being able to see that on a 15-minute chart brings me back out to the hour and say, we may still have to build on some downside because maybe that's just a sub-minute wave one. I don't know. So we have to let this play out on the hourly chart. I need to be able to count 5 down on the hourly chart. But in the meantime, that still stands on a break below 15,734. That begins to throw a very negative light over this. But the major break and change would come on a 15,538. Breaks there with a little bit of force, which I believe it would have. If it starts getting down there, it's going to pick up steam. It's going to be important. So we may see follow through, but there's both sides now. I know this is a longer update. I hope you're listening all the way through. So being able to trade this, now you've got the characteristics. If it continues to accelerate lower, boom, it's not, the upside count is likely going to die. And now you can begin to focus. It's like, okay, so going down, what are we in? We're in a wave one. It can begin to accelerate. It already did today. So how close are we maybe finishing that first wave of minute degree down? Then we get a bounce. These are all very tradable, which is why I go down to the small level, the degree level. Each one is now tradable. This was extremely tradable on the way up, and this was extremely tradable on the way down, going in both directions. But it had a downward bias, so that made playing those bounces a lot easier. And sometimes they popped a little bit further than you thought, but that's okay because the downside made up for it. Again, got both sides. Play according to the price action play. Use your moving averages. They really do guide. They really do help, particularly when they start crossing over on these upper levels. And then you know what's going to result in. I mean, we might have been here when this thing crossed over and the 4 just started to slide below the 8 and then slide below the 20. But it just, you get the same result. Continuation. Because nothing gets hooking, nothing turns. It starts pointing more severe. And then you just ride them. Okay, I'm going to be finished because this could take too long. Have a great day tomorrow. It is Expiration Friday. Fireworks will continue. Next update will be on Sunday, the 18th, 19th, excuse me.